Back with Bobby and JJ Radio. We're still speaking with Bob Gardner. He had two great interviews earlier today. We spoke about all the projections of where we feel the market is going as far as under 200,000 or to the 200,000 to 500,000 market, and how that's going to become or maybe become in the sweet spot of the San Antonio metro area. And we also spoke about appreciation in some of the subdivisions that Bob has been looking at and studying since the late 80s. And now we're going to speak about some other stuff that trends have to do with, which I think is very important, which is population. If you missed any of those first two segments or interviews, just go to bobbyandjradio.com, become a fan of the show, or you go to SoundCloud. This entire show will be on SoundCloud on Mondays. And if you want to see how good looking Bob is, you go to our YouTube page, and he will be on our YouTube in about a week or two. So Bob, let's get back to it. What are some of the factors that can affect the housing market in general?
Well, the biggest factor that affects housing we found over a period of time was interest rates. As interest rates go up, which they invariably will do at some point, it has a negative effect on housing. As they come down, it has a very positive effect. It's the number one factor.
Sure.
And today, we're looking at interest rates as low as, I went all the way back to 1980. I haven't been able to find rates lower than this, and especially lower for this prolonged period of time. So that's been one of the real drivers of trying to recover this economy in the country, has been keeping interest rates low so the housing market will recover. 95% of our economy, national economy, depends on consumer spending, and and housing's a major part of that.
Sure.
So fortunately, the push is always on: keep rates low and keep housing active. So that's what we've benefited from that in the state of Texas for some period of time, because we also have a very good economy in Texas. So it's been a good double edge. And low interest rates help people afford bigger houses. And one thing we like about Americans is that they like to buy, and they like to buy houses, and they like to buy all the houses they can afford. So keep those rates low, and they buy bigger houses, which is part of the reason why we see the more expensive houses selling as a percent of our total housing stock. The second thing that is really very important is job creation. And we've had 3 good years. If you take a look at 2012, 2013, and 2014, 2 of those years we have created almost 30,000 new jobs annually, which is very high for San Antonio.
Yeah.
And the third year, those statistics get adjusted from time to time. But even in the third year, we had more than 20,000 new jobs. So the combination of interest rates and all these new jobs is what's been driving this housing market in a very positive direction. The other thing that has a big effect and Texas it's very exciting in the state of Texas, and that's that just the change in population. San Antonio is a young city compared to places like Detroit or other places in the east. Births over deaths far exceed the deaths, and so we have an average age is very young in San Antonio. That's good for housing. That's good for real estate. And in the state of Texas, and I looked at this the other day because I was thinking about what the future holds for people in the real estate, the mortgage business, and it really holds well. The population of the state of Texas, from at least at 2013, 27% of our population were young people between the age of 0 and 17 years. Not particularly surprising, but when you look at it on a bar chart, is a huge segment of our population. And those young people are going to be forming households, and so the future of real estate in San Antonio is assured because of the youth in our population and our jobs growth. But the thing that's even more exciting is that if you look at the primary housing age, what buying age is, say between 35 and 60 years old. 32% of the Texas population is between 35 and 60 years old. And those are the people that are going to be continuing to buy new houses, starter homes, moving up, buying bigger homes. And all of that is extremely good and very good for housing, very good for house appreciation, and very good for investments in housing.
Sure.
So I was happy to hear that. It was interesting to me because I'm over 65 years old. It was interesting to me to see that the over 65 is 11% of the population. So I was kidding some people. I said, "What happened to us all?" And at any rate, they over 65 accounts for 11% in Texas. But as some of my friends say, but the baby boomers are starting to get over 65 on a pretty regular basis. So I suppose that percentage will go up slightly, maybe to 15%. But and sometimes people, if I can cover this subject, I've
Sure.
had some people lately ask me, because there's been some national attention placed on housing bubbles, and there's been some national writers that said, well, housing prices and economic activity in the state of Texas has risen so fast, and housing prices have risen so fast that there'll be a bubble and they'll start to come back down. But, when I look at the inventory levels in housing and how much of a shortage we have in certain price ranges, it's very difficult to me to say anytime soon, this year or next year, that we would be looking at any kind of a bubble and we'd have some depreciation in real estate values. It's just hard to see. There has been some talk about on the jobs front that the Eagle for Shell will have a negative effect. Well, let's be honest about that. I'm old enough to where I suffered through that period of time in the 80s, when the price of oil dropped very rapidly.
Yeah,
and it did have a negative effect on demand, which had a negative effect on values. And so for us to think that we won't have some effect from this drop in the price of oil would be naive on our part.
sure.
But do I think that it's going to be catastrophic like it was in the 80s? And at least at this point in time, I can say that I just don't see it. I think that real estate, the number of real estate sales this year will have a hard time exceeding last year in 2014 just because the inventory is so tight.
Sure.
And our jobs growth may slow down a little bit in
Sure.
2015, but it's going to slow down from very, very high levels.
Sure.
And including our house levels. Our real estate sales were operating at almost historically highs, not in the new home side, but we are operating at very, very high levels on the resale side.
Right, and I was speaking with a client just yesterday. She heard me on the phone, my radio programmer here, and he was saying, I can't find a house. I just can't find a house. We can't find our dream home. It's just not out there. And I said, look, if you can't find it now, it's going to be hard to find it later because and he says, no, I think it's going to bubble. I think, I'm just going to wait. It's going to come back down. I said, look, if it does come back down, and I'm not the expert. I'm sure you're better suited. But if the market comes back down, it's because interest rates went up. So unless he's paying cash, what's good for the goose is not good for the gander in that situation. Secondly, so I told him, just take advantage of the low money. The money's cheap. Go grab some money, right? Second thing, I said that I don't think that there's going to be the same housing bubble that we went through in 2008. I know you've been through probably way more recessions than we've even thought about, is that in 2004, when I started real estate, underwriting requirements was pretty much hold up a mirror to the guy, and if it fogs up, he's ready to buy a house. And now the regulations and stipulations have, just evolved to really, I feel like it's harder and harder to get a loan. I'm refinancing my house right now. We have some employees that are buying a house right now. They want your firstborn, they want blood samples, they want independent business owners like Bobby and I. We're the most scrutinized group in that can buy or not buy, because we have so many deductions and mileage, and they don't want to see any kind of dip in production in our businesses, the plural. And so I feel that's the biggest change, don't you think, since 2008, or before the 2008 crash or the bubble, is that the mortgage industry has kind of set their foot down a little bit and say, no, we're going to be careful. We're going to make sure this doesn't get out of hand.
Yeah, well, it was one of the biggest changes, and it's still something that we watch today because it affects people's ability to buy a house. There's a couple of things that affected, and One of them is just all the underwriting standards have increased. Although I have to say, in 2005 and 2006, we didn't really have any underwriting standards. They threw all the standards out,
Sure.
and people didn't have to. So a lot of people weren't qualified. That creates its own set of problems that I don't want to get into right now.
We don't have time.
But the point is that they are beginning to loosen up some of those standards right now, especially FHA standards. And it's going to help people both refinance and to buy a house. That's going to be one of the positive things, I think, in 2015. But you're very right. Those underwriting standards have been a sort of a wet blanket, especially on the starter home. We talk about there's a huge demand, but people either they can't find a product or they can't qualify because the standards have been so high for the starter home part of it. And the other thing that is talked about a lot, and I still think it's difficult to deal with when you're buying a house and you're a younger person, is they come out of college with a lot of student debt.
Right.
And the student debt is hard to quantify, and it's hard for underwriters in the mortgage underwriting business to figure out how to put that into the income stream, and then how to qualify for a home loan. It's still difficult, a little more difficult if you're self-employed, like Bobby, you and JJ are. And so it's those things are a big portion.
Yeah. No, Bob, we appreciate all of your knowledge. You just breaking off a little bit is really important to me, Bobby. We're looking forward to this show for a very long time.
We need to get you committed for next year. You're coming next year again, right?
Yeah, we'll make this
I'll
annual.
be right here.
And if you want to see the first selfie that Bob Gardner has ever taken, you go to our Instagram. You can be a fan of our show at BobbyJJRadio.com. We will see you next week for a new show.
Bye.